remember I said the horse that's winning races, what do? Put more money on them. The horse is losing races, what do? Shoot them, okay? No shelters, Mary. Shelters. We're not putting no stinking shelter, a horse in a shelter. If he ain't winning for us, we're going to shoot him. All right? Yeah. Hey, that's the Marine Corps way, okay? All right, so channel formations. Now, so let me show you one very specific. I mean, so you actually do this for real. You don't do it hypothetically or theoretically. All right? Here's a fine, you know what? Since it's being videotaped, can you see the detail up there? Okay, I'm gonna have to cover up their names then. All right, so here's Mercer International. Here's the stock we were following. By the way, you know what Mercer does? I don't have a clue. All I'm following is the chart information, all right? And I really don't care. All I want to know is there enough volume to buy in there, and you know, if it breaks above or below a channel, we're in. Well, guess what? This channel was between 12 and 10. How convenient. What percentage is that from 12 to 10? 20%, okay? So 20% that we can make on this trade, all right? So I'm telling all my clients, you know, all my students, you buy this thing if it breaks above. What price does it have to go above to get in? 12. Got to go above 12. So in the old days, it was 12 and an 8, okay? I used to like it when there was no computers. I mean, you know, just did it. Intel hates it when I say this. I keep saying the computer fad is going to go away. You know, but I don't like it when I say that. But anyways, so as soon as it broke above 12, we're in, folks. So let me cover up their names because since it's, oops, hold on. Did that cover up their names, by the way? I hope it did. Okay, because it's got their name and addresses on it. Okay. So we bought it at 12 and an 8. As soon as it broke above 12, we're in, folks. What's the date we bought it at? October 12th, 1993. We bought this in that account, okay? 12,000. You can see the price that they paid plus their commissions, et cetera, okay? Now, you know what happened to this stock, folks? And by the way, I had a lot of my students buy this one. And guess what started happening to this one, okay? It started skyrocketing up, okay? You know what? Some of my students, what happened to them? They fell in love, okay? Don't sell this one, Roy. Don't sell this one. Now, if I bought it for you at 12 and it going up, by the way, this went all the way up to 23. You know where my stop loss was now at 23? 20 3/4, all right? So my stop loss had gotten closer and closer. As it went up higher, my stop loss got in closer and closer. You know what? Remember, we got in this thing October 12th of 93. Take a look at where we got out of this trade, okay? In February, 4 months later, we got out of this trade. Oops, sorry, we got out at 20 3/4. How much did we make in 4 months, folks? 80%, 4-month return, okay? In stocks, that's the hardest damn thing to do. Sorry, that's the hardest thing to do. Is make money in stocks, but you can do it if you know what you're doing, okay? So in 40, we made, now, you know what's interesting? We got out at 20 3/4, but some of my students who fell in love, they watched it do this, down to 6. From 12 to 23, down to 6. But guess what happened here? Look what started forming here. I know that God is great. It gives us another opportunity, right? And so Flores is no dummy, so guess what? We're buying again. And by the way, after this buy, we're going in again at this price. Look at the price we bought. Remember, the top of the channel is 10 5/8. Take a look at where we bought for her. You know, where we buy. 10 7/8. By the way, this went to 25 in 8 months. From 10 to 25. So in 4 months we made 80%, and then in another 7-8 months we made over 100%. Same stock, and I still don't know what they do, and I really don't care. Okay, we're just following the chart patterns. All right. Now you got to make sure they got enough volume to trade in. Okay, so that you do check the volume just to make sure that hey, if I go into it, I want to make sure I get out of it. Okay, if they're only trading 500 shares a day, it's not a good stock to be. Okay? So that's why I'm saying. There's a rhyme or reason for doing something. Why did you go into this stock? Why did you go in? Well, not just to make money, but what was the reason to buy at that specific moment?
You saw the pattern.
The minute it broke the channel, you're in. As a matter of fact, your order's already sitting there.
Yep.
You can be in Hawaii, your order's already sitting there, and the minute it breaks 12, you're in. And your stop loss gets triggered as well, okay? What do they call that in our practice accounts? One triggers all or something
One
like that?
triggers all.
One triggers all. So one order triggers them all, okay? In our practice accounts, you'll learn how to do that. You'll learn how to do it in your real account too. That means one order triggers everything, okay? But you're doing it for real, folks. There's a rhyme or reason for doing something. It's not just, hypothetical or theoretical. You bought it because something happened.
Yeah, I didn't understand what you were saying about the volume, make sure the volume is there. How do you, what do you
Well,
think about?
if a stock's only trading 500 shares a day,
But how do you know that?
well, you'll see the volume every day. It's printed on the stock charts. It tells you, how much is being traded. Yes.
What number do you use, or do you have a set number that you
No,
use?
but,
for
I'd like to see 100,000 shares, traded if you're gonna trade it, or 50,000, but, my point is, if you see it only trades 1,000 shares a day, it's not gonna be good. It's, anybody comes in with 2,000, they're gonna move the whole market, okay, up or down, all right? So let me show you what can be done when you take advantage of these things. Well, I gotta cover him up too. I gotta cover up all my students here. I gotta cover up these names here and addresses and phone numbers to protect the guilty here. All right, so here's a stock account. Hardest thing to do. Started in January 2nd with 500,000. His name is still over there, sorry. But the value of March 29th was now at how much? That's for how many months is that? 3 months. That is 89%. How many of you have made 89% in your whole account in 3 months? Okay, it's unheard of, folks, and yet you can do this consistently. I mean, obviously we margined this account up and we did some other things that you normally probably wouldn't do, but because we do, I flew jets off aircraft carriers, so my risk tolerance is a little bit higher than most people, okay? So, all right. By the way, do you know the first time you land a jet on a carrier, they send you out by yourself to go land a jet on a carrier? By yourself, the very first time. Do you know why? There's nobody dumb enough to go with you, okay? So, and they figure one guy gets killed is better than two, okay? So here we go. Mutual funds, we cover his name up here too. This is a guy who works for Continental Airlines. Mutual fund, this is a mutual fund account, which is even harder to make money in. It's 401k. In 2006, from January to December, he was up 40% in a mutual fund, all right? Now, I know what you're gonna say. Wasn't the stock market up that year? Yes, it was up 6%, okay? Because somebody always says, yeah, but the market was up that year. Yeah, you're right, it was up 6%, okay? Here's his 2007 count. He's still making money today, folks. 2007, 45%, okay? So you can do it in mutual funds. As long as you can see a chart, you're gonna be able to look at it and make money, all right? Now, I got something I want to hand out to you because we're going to go over this now. David or somebody, David, do me a favor. Let me just give that to people here. Just pass them around here and I'll pass these around just a minute. Need more? Let's see, you need more in the back?
Yeah, over here
More.
too.
I only got 23 here. How many people we got?
Oh, yeah.
So Asha, you and Jill have to share, all right?
I'll share.
Rosa, you and Dick, you'll have to share, all right? Got another one? All right. I want you all to share. Sharing is what?
Sharing.
That's not what I tell my kids. Sharing is BS, all right? I tell them sharing is BS. Here's your first page here. I want you to look at the first page. Because when you get good at this is what you'll be doing. By the way, who's blue Gemini in here?
That'd be me.
That'd be you, wouldn't it? Okay. All right. So August the 1st, 2008. By the way, when the Dow was at 12,000, I was already telling everybody there's going to be rallies, but where are we going to go? You're going to go, this thing's coming crashing down. If you know how to read the charts, you can tell it's going to crash, all right? So I was already suggesting to people do what? Smith International went below, a break below this means you short and buy put options. I'm going to show you how to do that in just a minute, how to make money on the downside, all right? So you short the market. By the way, I was shorting the market. KBR shorted 27. You know how this one went from 74 to 18. This one went from 27 to 11. This one went from 24 to 12. Could have made a phenomenal amount of money. That's over 130% in 3 months on all of those. More than 130%. Shorting the market. Why was I shorting the market in July and August of 08? Because the indicators were saying it's getting ready to come down. Now it's still at 12,000. You know what my prediction was? I predicted to my students that we would hit somewhere between 5,000 and 6,000. That's where the market was headed, okay? But here's why I'm really showing you this. I want you to see something here, okay? Remember, this is August the 1st, 2008, when I sent this email out. I want you to look at this right here, right there. And it says the euro on the futures market and the Forex market made a reversal pattern to the downside last week on the weekly candlestick chart. If you'd gone short the euro on Monday, you'd be up 100%. In the Forex, you'd be up even more. The downturn in the euro. Now the euro had been going up for 7 years in a row. Straight up. If you look at the chart, and I'll show you the chart in just a minute. And I was predicting that we are now going to start coming down for at least the next 2 years. And you know what, folks? I called it to the very week that market hit its top. And guess what happened? Here's where I was looking at right here. Here's where I made the call that we're getting ready to come down just by looking at that. And look at where we've been going for 7 years. Straight up. And now I'm saying, no, this is going to crash. Because I can read the chart, folks. And guess what happened? Came next. Here's where I made my prediction, and guess what came after that? 2 years of downslide.
Did you look at that channel that's right up there?
No, I wasn't using channels,
Okay,
ladies and
what were
gentlemen.
you using?
Well, that's a whole different game, all right? This is just an introductory. I just want you to know there's a rhyme or reason for doing things and a rhyme or reason for looking at something and knowing what comes next to a high degree of probability. I'm going to be wrong a lot of times, okay? You know, I remember one time I thought I was wrong, but now I was mistaken, okay? Anyway.
Even when you're right, you're wrong.
Exactly.
When you're wrong, you're right.
Exactly. But you're going to be wrong on occasion, and that's all right. You're going to take your stop loss. You're going to take your losses and go play the next game, okay? But you got to know what you're looking at to tell you that's coming down. And by the way, folks, I made in my own account, over 1,000% in my own account in less than 3 months, okay? Because most of it was here. Most of it was there. Folks, where are you going to make 1,000% returns in your whole account in less than 6 months, all right? There's no place else you're going to do it. But you got to know what you're looking at. You got to know why this is about to turn and go in the other direction, okay? So, people, it behooves you to start learning. What am I looking at here? What am I looking at here? And why is this about to turn? So if I got this one is this the same one? That's the same one. Okay. So that turn in the euro dollar, I called it right to the very week. By the way, remember I've been telling you that my call on the market was, that's the next page there. Look at this, my email on January 2nd to everybody. And I said, all right, look, one of my students was sitting in first class, and guess who was sitting next to him? Booyah! Jim Kraler.